So today we announced Canaccord, who's a really well-respected broker with a really solid sales team in the UK, but importantly in the US. And we've had increasing interest from investors from the US. And so appointing a broker who can really help us in that market, will help sort of refresh the shareholder register and hopefully drive the share price up.
Hello, you're watching Proactive. Joining me is Bango CEO Paul Lorby. Paul, very good to speak with you. You've just released your first half trading update. Could you walk us through the key financial highlights, please?
Yeah, sure. Great. I mean, revenue's up, so good progress on the top line. ARR growth of 21% to 15.6 million. And importantly, EBITDA grew by over 60%. And actually, if you remove the 1 million additional benefit in last year's number from the other income that came from the Document Digital acquisition, actually EBITDA grew by over 130%. So really strong performance in the first half.
There has been an increase in net debt, though. Could you shed some light on the factors behind that?
Yeah, sure. That's purely working capital movements. And I think we talked about this a little bit back in June when we announced the extension of the shareholder loan with NHN, and we put in place that revolving credit facility with NatWest. And those two together, strengthen the balance sheet to allow us to support these working capital movements. And more importantly, provide us the ability to accelerate some of these cost reduction initiatives. And you see some of the benefit from those in the first half EBITDA growth, but they'll accelerate in the second half, and you'll see increased savings in the second half moving into 2026 when there's material cash generation. So really, those financial mechanisms have given us the flexibility to really sort of structure the company for profitable, sustainable growth.
Transactional revenue appears to have remained flat. What context can you provide around this performance?
Yeah, so with the Document Digital acquisition, we acquired a small number of profitable, but there are high revenue, high cost of sales routes. And there's been a lot of volatility in those routes. I think we talked about that again back in June when we issued last year's results. And it's the volatility in those routes that's masked the core growth of the transactional business, which actually grew by 10%. So it actually grew by more than we expected in the first half. But I say overall masked by these these one or two routes which are profitable, but high revenue, high cost of sale.
Turning to the DVM and subscription bundling side of the business, Paul, how's that been performing so far this year?
Yeah, really good. It's been a strong first half for DVM. The revenue grew by 15% from last year. Growth on DVM is always going to be a little bit lumpy because of the one-off connection fees, which were a lot higher last year than in this year. The license revenue, which is, I guess, that key measurement of growth, actually grew by 21%. You see that in the ARR growth. And net revenue retention, which is the growth from existing customers, was again over 100% to 108%, which shows as customers climb through the tiers, we generate more and more revenue from existing customers. But actually, one of the better indicators of KPI is probably the number of active subscriptions. And that's a new KPI we've introduced. That's doubled year on year. And that's a good measure of the importance of DVM in the subscription economy, really. Now, it sort of correlates with revenue sort of roughly. It doesn't correlate exactly because the license revenue is structured in tiers. But broadly, tens of millions of subscriptions generate tens of millions of revenue. And so if you extend that, hundreds of millions of subscriptions will generate hundreds of millions of revenue. And 100 million subscriptions may seem a long way off from 20, but we've clear line of sight to that. And that's supported by our customers. And only this week, the Verizon CEO talked on CNBC about doubling the number of customers with perks this year compared with last year. So with the growth in existing customers and coupled with some of the new wins that we've announced, we really have a clear path towards those hundreds of millions of subscriptions.
You mentioned those recent wins. Can you share more about them and what they mean for the business?
Yeah, some great new wins in the first half and really an acceleration in the momentum. We signed 7 new deals in the first half. And to put that in context, we've done on average 9 in 12 months over the past 2 years. So definitely an acceleration. And really, I think some key wins, and we've talked before about the win in Korea. That's our first ever contract in Korea, opening up that new market, working with Korea Telecom to bring AI bundled services to market. Our first telco DVM customer in Japan. So obviously we have telco with an employee benefits company for some time, but this is our first telco DVM in Japan. Additional wins in the US that now give us 6 out of the top 8 operators in the US. And another new customer in Western Europe, which, Western Europe, we're really seeing at long last the move of some bundling projects out of the planning phase into the implementation phase. So we're hoping that momentum will continue moving forward.
Paul, you've delivered some strong operational progress, but it doesn't seem to be reflected in your share price. How do you interpret the current disconnect?
Yeah, I recognize that, and I share our shareholders' frustrations with that, and I think you see some of that in a couple of the analyst reports. I mean, the 2 analysts that cover Bango both have a a 12-month price in excess of £2, which is almost 2.5x where we are today. And actually, there's some interesting quotes in those. One talks this morning in the note they put about the shares appearing to mispriced. Another talked about how there's material upside for investors that recognize and value the potential. So I think we clearly recognize and share the frustration there. I think as we see the business delivering results, I think that has to correct. And it's one of the reasons we appointed a new broker. So today we announced Canaccord, who's a really well-respected broker with a really solid sales team in the UK, but importantly in the US. And we've had increasing interest from investors from the US. And so appointing a broker who can really help us in that market, will help sort of refresh the shareholder register and hopefully drive the share price up.
Paul, I hope you'll continue to keep us updated on your progress. Thank you very much for taking the time today.
No, great to be here, and we'll be reporting full interim results in September. So I look forward to talking to you again then, if not before.
Look forward to that too. Paul Larby, the CEO of Bango.